Excellencies, distinguished guests, ladies and gentlemen. It is my honor to welcome you to the grand opening of the 2021 World Investment Forum on Investing in Sustainable Recovery. My name is James Zhan. I'm the Director of Investment and Enterprise Division at UNCTAD, which organizes the forum. I'll be Master of Ceremonies for today's grand opening. The World Investment Forum is the largest global platform for investment development. The forum is the biennial event that facilitates dialogue and action on the world's key and emerging investment challenges. The forum offers the investment community a unique opportunity to shape the global investment environment in multiple dimensions and foster partnerships at all levels. The forum gathers investment stakeholders from more than 190 countries, with participants representing the full spectrum of upstream and downstream investment. In doing so, it integrates sustainable development along the entire investment chain. The forum was established in 2008. Over the past 13 years, the forum has made remarkable contributions to investment policymaking and partnership. The 2021 World Investment Forum comes at a critical time for the global economy. To recover fully from the crisis and to build forward better, we need to boost the investment in sustainable development and inclusive growth. Towards this end, the forum will tackle the challenges and opportunities arising from three mega trends: the new industrial revolution, the sustainability imperative, and the drive for economic resilience. The 2021 forum has 95 events jointly organized with 67 partner institutions. It is the first fully online forum. Today, we have an outstanding lineup of speakers for the opening, including Ms. Rebecca Greenspan, Secretary General of the United Nations Conference on Trade and Development, Ms. Amina Mohammed, Deputy Secretary General of the United Nations, Her Excellency Ms. Mia Mottley, Prime Minister of Barbados and the President of UNCTAD 15, His Excellency Mr. Abdullah Shahid, President of the United Nations General Assembly, Mr. Duarte Pacheco, President, Interparliamentary Union, Mr. John Denton, Secretary General, International Chamber of Commerce, and Ms. Nandini Sukuma, CEO, World Federation of Exchanges. Without further ado, it is my honor to invite the Secretary General of UNCTAD, Ms. Rebecca Greenspan, to formally open the 2021 World Investment Forum. Secretary General Greenspan, you have the floor.
Excellencies, ladies and gentlemen, I am very pleased to welcome you to the UNCTAD World Investment Forum 2021. It is an honor to be surrounded by so many devoted friends of the Investment for Development community. This is the first major development investment forum since the COVID pandemic began. And as we know, we are recovering, but this recovery is still fragile. It is uneven, and it is insufficient. So, ladies and gentlemen, this pandemic, the second globally significant external shock of this century, will not necessarily be the last. Some predict we will have one external shock per decade. So if we want to avoid external shocks to become both larger and even more common, we have to properly prepare for shocks not to shock us any longer. This means that how we rebuild after each crisis will define how we will withstand the next. If we keep building houses over the sun, then we can only expect them to keep falling. A case in point are the 12 years that separate the COVID-19 pandemic to the global financial crisis. Global greenfield foreign direct investment, for example, still hadn't fully recovered. investment flows led by massive QE operations were being directed towards mature, rentier markets, fueling asset inflation and wealth inequality in the rich world. In the meantime, developing countries were underfinanced, despite having higher returns on investment. And all of this in a world awash with cash. There has never been so much liquidity, so much investment firepower in the history of mankind. And so it is all the more puzzling to see how this money has, for the last decade, despite some positive signs, been directed mainly towards assets that already exist, such as prime real estate in big cities or short-term bonds, instead of this money going towards new markets, new ideas, new technologies, and new enterprises in the developing world. The COVID pandemic has made this puzzle even more puzzling. Last year, global FDI dropped by 35%, reaching a level that is today almost 20% lower than the bottom of the global financial crisis. Like development finance, the green transition is also underfunded. The market is clearly misallocating resources because risk is being mispriced. I say all of this because we have before us, in this post-pandemic recovery, another window of opportunity, a chance to do things differently, to close the gaps, invest in the new, and build resilience. Ladies and gentlemen, this panorama has huge repercussions for investment and for the investment for development agenda. I will elaborate on three major challenges that arise from it. One, the direction of industrial development. Two, investment in infrastructure. And three, increasing investment towards the Sustainable Development Goals. These three challenges are interrelated and interdependent. But if we can get our investment priorities right and respond to these three challenges correctly, then we will have the bedrock of a sustainable, inclusive, and resilient recovery, a recovery that does not waste this opportunity. Let me start with the first challenge, the direction of industrial development. Even before the pandemic, we were seeing great changes taking place in global supply chains. The pandemic has accelerated them. The need for shorter, less fragmented, more resilient supply chains is now greater. This has implications for developing countries as firms look to reshore production with less outsourcing and a greater concentration of value added. At the same time, we have all experienced the move towards more digital work patterns. This is also accelerating due to technological changes in manufacturing and services, including automation and robotization. There will be a created opportunity for both and risk for jobs creation and economic development. Therefore, reversing the decline in investment exacerbated by the pandemic now needs to be underwritten by proactive industrial policies and smart investment promotion, including specific economic zones. Investment that seeks, for example, low-cost labor will remain important for some countries, but the pool of such investment is shrinking. With this, I go to the second challenge, investment in infrastructure. Recovery stimulus on infrastructure and the energy transition have significant implications, both in terms of project finance and international investment flows. The cumulative value of recovery funds intended for long-term investment worldwide is already approaching $3.5 trillion, and sizable initiatives are still in the pipeline. Considering the potential to use these funds to draw in additional private finance, the total investment firepower of recovery plans could exceed $10 trillion. For comparison, that is close to 1/3 of the total SDG investment gap as estimated at the time of their adoption. But for developing countries, this money is not only not flowing, but the lack of shovel-ready projects remains a key barrier to attracting more international project finance. Lastly, we have the third challenge: investment in the SDGs. Some progress on promoting investment in the Sustainable Development Goals from all sources, domestic and international, public and private, was evident before the pandemic. This was true across several sectors, such as infrastructure, climate change mitigation, food and agriculture, health, telecommunications, ecosystems, and biodiversity. But much of the progress we achieved is now at risk. According to UNCTAD, announced greenfield investment projects in developing countries fell by 44% in 2020. That stands in sharp contrast with the growth in sustainability-themed investment products in global capital markets, which amounted to $3.2 trillion in 2020, up more than 80% from 2019. However, to date, largely bypassing developing economies and investing mostly in advanced economies. UNCTAD has elaborated several policy packages for investment in sustainable development that responds to these challenges: balancing industrial and infrastructure investment, promoting and facilitating investment in strategic industries such as green energy and new technologies, targeting upstream investment, aligning financial markets with sustainable investment, especially in developing countries, and supporting the absorptive and implementation capacities in developing countries. So, dear ladies and gentlemen, the link between the three shocks I referred to at the beginning of my remarks, financial crisis, the pandemic, climate change, is a sustainability crisis, a failure to incorporate the long-term social, environmental, and economic impacts into our decision-making. The UNCTAD World Investment Forum seeks to change that by putting sustainability at the heart of policy discussions, by providing real-world examples of best practice, and by presenting a vision for sustainable investment. The program of events this week, more than 90, addresses a wide range of these key issues. We have brought together to this unique event the broadest coalition of investment community stakeholders. That's why I really call on all of you to ensure that by the end of this week, we will be in a stronger position to tackle the investment and development challenges we face. There is just too much online. I trust we will achieve this goal thanks to you. I really thank you.
Thank you, Secretary General Greenspan. Now we have the honor to present a message from the United Nations Deputy Secretary General, Ms. Amina Mohammed, to the forum.
Excellencies and friends, you meet at an inflection point in our history. The pandemic has wreaked havoc, disrupting the powerful economic engines of trade, manufacturing, and transportation. The impact on people's health and livelihoods have been devastating, in particular for women, the poor and most vulnerable. As investors, both public and private, you have enormous leverage over our future. Without immediate and bold action, the long-term impacts of the crisis on peoples and economies will be devastating. Focus must move from stimulus and income support to investing in a green, inclusive and resilient path to a sustainable future. Some progress has been made, with $3.5 trillion earmarked for long-term investment, of which a fifth will be for green spending. This is a huge opportunity for sectors such as physical and digital infrastructure, renewables and health systems. But this is not enough. Many developing countries find themselves in a descending spiral of financial distress, facing higher borrowing costs, while at the same time less able to pay those costs and diverting much-needed funds from servicing people to servicing debt. Foreign private investment in productive capacities can play a significant role in a sustainable recovery. In particular, investment in decent job creation, including in the green and care economies. This will also contribute to reversing lost ground on achieving gender equality. As the World Investment Report has noted, $1 of direct public support to infrastructure projects, under the right conditions, can mobilize $10 of capital investment through public-private financing schemes. And with 1/3 of the currently adopted public investment plans deployed through various forms of partnership with the private sector, the investment potential could still reach $10 trillion. That would represent 1/3 of the total investment gap estimated for the SDGs at the time of their adoption. To get there, we need to overcome important interconnected challenges. The collective wisdom of all stakeholders gathered here today at the World Investment Forum is where opportunities and solutions must be found. I commend your efforts towards a future that is inclusive, just, prosperous, and sustainable. Thank you.
I thank the Deputy Secretary General of the United Nations for her message. We'll now hear from Her Excellency, Ms. Mia Mottley, Prime Minister of Barbados and President of UNCTAD 15.
Madam Secretary General, heads of state and governments, heads of international organizations, thank you for the very kind invitation to join you today and to deliver myself of these remarks. Coming on the heels of the very successful UNCTAD 15 held in my country, Barbados, today's event offers us the opportunity to focus on key challenges facing the global investment development community. It also affords us the opportunity to outline solutions to not only address the immediate challenges, but also to seek to establish solutions for future sustained development investment. My friends, COVID-19 has truly exposed the reality of the multidimensional nature of the development challenges of all states, but none more so than small island developing states. We are all familiar with the debilitating nature of our vulnerabilities, small size, the openness of our economies, and our human, financial, and technical constraints. This climate crisis, with the occasional sea level rises, increased and more intense weather systems in the form of storms and hurricanes, economic and fiscal challenges in many of our trading jurisdictions, it has also created its own unique development test for us all. These realities and the accompanying humanitarian challenges that have emerged as a result of these variables have served to increase the cost of economic security, food and nutrition security, and of course, health and human security. They are also all interwoven into and have substantially increased our existential risk. This once-in-a-lifetime global health event has specifically occasioned a total collapse in the travel and tourism industry and a reduction in remittances, creating a worsening of financial conditions in the developing world dependent on these two economic input variables. The response from the international financial community has been, in our opinion, totally inadequate. It is no secret that governments that were already under severe economic pressure were forced to expend more than they could reasonably afford to simply protect and safeguard the lives and livelihoods of their populations. These actions are best described as extremely costly exercises. As our foreign exchange became depleted and with reduced fiscal space available to finance our living, we have been forced to incur debt more than most can afford. These loans were made available to those developing states, mostly in the form of soft loans from the international financial institutions. The unnecessary graduation of countries classified using per capita income as middle income, based on a skewed metric that in no way acknowledges our vulnerabilities, is something that we have spoken about. Such graduation has further exacerbated an already difficult financial environment and placed even more strain on the finances of developing countries. Mercifully, we are beginning to see the change of the direction with respect to the attitude towards vulnerability. And we hope that the recognition that vulnerability is a key consideration as we seek to see the IMF establish the Resilience and Growth Trust is an indication that we are finally recognizing what is truly at stake. Not just that we have been able to increase the earnings of our people in our country, but more importantly, their vulnerability given the risk, the multiple risks that we face today. While there have been significant successes achieved in past fora, in this, the preeminent global platform for policy debate on investment for development, our continued focus throughout, and as we emerge from this global pandemic, must be more strategic and more inclusionary than it has ever been if it is to be successful and sustainable. First, the international financial institutions and the multilateral trading system must be repurposed to ensure that it reflects the needs of those nations who did not exist when many of these institutions were developed and who, quite frankly, have now to have their needs addressed in a purposeful way. I've already addressed the issue of those of us who are vulnerable and the recognition that we are seeing the turning of the corner with respect to the recognition that vulnerability is a key consideration in determining who should access concessional funding or not. Policymakers, the private sector, and other key stakeholders now have a unique opportunity equally to shape international investment policy in a manner that completely alters the traditional approach to global investment policy making. I firmly believe that the more inclusive and comprehensive dialogue can be amongst non-traditional investment development stakeholders, that will be fundamental to the creation and establishment of novel investment policies and norms that will benefit all of us, especially the most vulnerable. Next, a new approach to the acceptance and recognition of global public goods and their inclusion into the soft approach to global investment policy making must also be included into the equation of promoting sustainable investment and indeed prosperity for all. The technological changes that are at the center of the new industrial transformation have also begun to influence a new approach to investment in new sectors. Fundamental to this approach must be a more purposeful investment in data and data analytics. This approach to the acquisition and the use of data must now go beyond utilizing the same for simply descriptive purposes. The use of data must become more prescriptive and move to the center, my friends, of our policy making. The use of artificial intelligence in the creation of developing a new global citizen that can take his or her place anywhere in the world is also essential. Artificial intelligence should be at the center of our transition to the smart cities and smart nations that create the capacity necessary to finance our investment in the global public goods so necessary to fuel our future development and our stability as a global civilization. Its impact on education will create the fertile ground for the industrial Internet of Things that is necessary for small state transformation to make them more competitive and ultimately equal to the more developed nations. Ours, my friends, must be innovative and creative approaches to the reconstruction and construction of all around us, seeking to ensure our insulation and protection to every variable that threatens our survival and our very existence. New ways to build houses to resist all aspects of the climate crisis, the constant pursuit of renewable energy sources, the use of electronic and solar cars, and other modes of transport are just some examples of where the opportunities for investment lie ahead of us. We must be bold to take the alternative action necessary to fuel the connectivity needed in an international trading system that now demands the same. My friends, COVID-19 may have actually pushed us to make the leap that cements the necessary connectivity that creates a novel platform for improved, sustained development at this stage of our existence, and pushing the productivity that we have to levels that will carry our economic earnings, we hope, to a new platform. This, my friends, has been the first small island state, Barbados, my country, to be fully connected by fiber optic, establishing a platform that not only connects our citizens internally, but that also links us to the global supply chains. I will fuel now new patterns of investment and different investment development outcomes. This must be the new manner in which we create a universal and inclusive platform for investment stakeholders to effectively respond to and address the key emerging investment development issues. This will also be the basis on which we formulate strategies to optimize the contribution of investment to sustainable development and indeed, ultimately, what we all want. That is prosperity for as many of our people as is humanly possible. That is our mission. And we look forward to working with you and other countries across the world to create that path for the post-COVID recovery that is absolutely critical, especially for small nation states who are dependent on tourism and travel and whose economies all would have declined double-digit numbers in the last year. We know we can turn it around, but we know that without investment, the opportunity to turn it around will always be limited. Without investment, we cannot grow the pie in a sustainable way such that all persons can benefit from it and not just those who had the competitive advantage initially. We look forward to working with the states of the world to create that atmosphere where investment can flourish. I'm obliged to you. Thank you.
Thank you, Ms. Prime Minister and the President of UNCTAD 15 for your remarks. The next speaker is the President of United Nations General Assembly, His Excellency, Mr. Abdullah Shahid.
Excellencies, thank you for the opportunity to participate in the 8th World Investment Forum. My appreciation to UNCTAD for organizing today's event. This year's theme, Investing in Sustainable Recovery, could not have been more timely and relevant. The world is only beginning the long-haul process of recovering from COVID-19, while at the same time facing the looming threat of climate change. For countries that were already struggling to achieve development goals, the pandemic was a severe setback, and there is no indication that this setback will end anytime soon. With vaccine inequity, prolonging the pandemic, and with debt and other structural limitations holding back progress amongst countries in special situations, recovery is at risk of stalling before it even truly begins. Excellencies, ladies and gentlemen, this brings me to the challenge that must be addressed at this forum. How can we concretely remove the obstacles to invest and enable a sustainable recovery? We can and must offer tangible solutions. Without such efforts, all we have are nice words and good intentions. And any solution must include all of us. It is the only way to meaningfully move the needle. This includes the United Nations and national governments, to be sure. But it also includes investment companies and entrepreneurs, stock exchanges and financial regulators, institutional investors and fund managers, micro, small, and medium enterprises, family businesses, and civil society and academia. We all have a part to play. This forum provides a unique platform to show up support across this diverse spectrum of stakeholders and to tap the opportunities to reignite investment where it is needed. Dear colleagues, allow me to make 3 key points based on some of the challenges outlined by this forum. The first challenge is to mobilize global investment for United Nations Sustainable Development Goals. What we need is a broad-based, equitable recovery that runs at the same speed for everyone. No one should be left behind. We are all aware that the 2030 Agenda and the Paris Agreement are blueprints for achieving inclusive, healthy, and resilient societies. The challenge now is to implement them. Let us work to ensure that recovery plans and programs are aligned with SDGs and climate targets at each step of the process. The second challenge is the realignment of global investment governance to address the increase in regionalism and protectionism. Here, the private sector is critical. As the engine of innovation and growth, private sector partners can boost jobs and livelihoods while also contributing to sustainable development, respecting human rights, observing environmental regulations, and adhering to physical regulations. I understand that global stimulus packages committed US $3.5 trillion of public funds to a post-pandemic recovery. While only a tenth is destined for developing countries, the private sector can leverage these funds to multiply the impact 10 times. This will provide 1/3 of the total investments needed to reach the SDGs. The third challenge relates to new technologies and the new industrial revolution. I agree with UNCTAD's assessment that the post-pandemic global investment context requires a new development strategy. This new strategy is built upon the premise that both sustainability and resilience must be fully integrated into a country's policy context or a company's corporate culture. It must be the core of everything that we do. To forego this would be to expose countries to further risk at a later time, potentially incurring more debt, more setbacks. Resilience can be baked into what we do. Excellencies, a focus on sustainability and resilience will fundamentally and strategically change our countries, companies, and communities. Think about competitiveness and investment opportunities. I look forward to the ideas and solutions that the group will propose over the next 5 days. These ideas will feed back to the General Assembly for consideration and action. Together, let us find our common ground to achieve common solutions with political will and through collaborative action. Together, we can truly rebuild communities, renew aspirations, and reset policies and purposes, sustainable and resilient societies in a post-pandemic world.
Thank you, Mr. President of the United Nations General Assembly. Now I have the honor to invite Mr. Duarte Pacheco, the President of the Interparliamentary Union, to address the forum.
Good morning. Dear Madam Rebecca Greenspan, Secretary General of the United Nations Conference on Trade and Development, distinguished delegates, ladies and gentlemen. It is a great honor for me to address you on behalf of the global parliamentary community as President of its organization, the Interparliamentary Union, which brings together 179 parliaments of the world. Some 46,000 men and women currently hold seats in national legislative institutions around the world. This is a huge force. These thousands of men and women politicians have a constitutional duty to create laws, to hold government to account, adopt budgets, and review public policies and accounts. After near 2 years of economic crisis that happened after a huge health problem caused by the pandemic of a small but a very dangerous virus that affects all of us, North and South, rich and poor, All countries of the world suffer with that. We begin now to see the light at the end of the tunnel as a consequence of the vaccination process. At some time, we began to talk, to discuss the process of recovery, of course, to recover our economies. But more than that, to achieve a sustainable economy, we should avoid the mistakes of the past, and we need investments, a lot of investment to achieve sustainable development goals. Of course, when we talk about investments, we refer to public and private investment. Public investment driven by governments at all levels, central, regional, and local, to create the basis, utilities for the territory, but also to support the social sector, essential in so many countries in order to have a sustainable economy. But we also need public investment in people, in the form of education, health, public transit, and so on. All of these require a lot of resources. For a long time, we have been hearing cries that there is no more money until the COVID pandemic appeared. And the money appeared as well. In rich countries, central banks, money generation capacity, and government fiscal policies helped generate trillions of dollars. These lessons need to be retained for the future after the pandemic. Instead of reverting to pre-pandemic policies, governments in developed countries need to invest more in public service that are key to the green transition, such as transport, as well in support of the care economy. The extra liquidity that was generated in the north also needs to be channeled to the south to allow many countries to recover in all kinds of aid, which unfortunately is still under half of 0.7% target. With regard to the private sector, ladies and gentlemen, investments in general and for the green transition in particular, we all know there is no shortage of private capital in need for investment opportunities around the world. The problem is how to put this capital to good use through productive investments. The reason why this huge liquidity has trouble finding investment opportunities may be because sometimes there are too many government rules and regulations, but also because there we find relatively low demand for goods and service due to low wage paid to workers, which in turn affects investments opportunities. And because in many countries, we may find problems of good governance with corruption in all levels. Only if we talk in a frank way of these issues, and if we find answers about the ways to change it, we will really have more investment, or better, investments with concrete and good results. The World Investment Forum is a perfect platform to promote exchange on these key issues, as we seek to recover from the pandemic in a sustainable way. Parliaments have an important role to play in these deliberations and to maintain a strong political commitment to sustainability and equity. You know that you may count with us, parliamentarians. Dear colleagues, dear friends, I wish you every success with this important event.
Thank you, Mr. Pacheco. Allow me now to invite Mr. John Denton, Secretary General of the International Chamber of Commerce, to address the forum. ICC represents 45 million businesses around the globe. Mr. Denton, you have the floor.
Thank you very much for the opportunity to address you today on behalf of the International Chamber of Commerce. We are the institutional representative of more than 45 million businesses worldwide. Friends, less than 12 months ago, many observers were predicting an end to globalization itself. The pandemic disrupted supply chains and investment flows dried up. Governments, suddenly confronted with the resulting vulnerabilities and dependencies, encouraged what they called reshoring, production of critical goods. And it was anything but certain that science could deliver us the tools to break the back of COVID-19. But today, the outlook is actually brighter. There is little indication of a sustained movement away from global supply chains. Businesses showed remarkable ingenuity in responding to difficult circumstances. And the private sector, yes, developed vaccines and treatments at record pace. All with the result that global trade will actually rebound significantly by the end of 2021 and more than offset last year's precipitous decline. But my friends, there are still challenges to trade, to investment, and to our systems of economic governance. In trade in recent months, many businesses in our network have suffered production outages or sales shortfalls due to disruptions in supply. Rising transport costs risk further stoking inflationary pressures in advanced economies in particular, translating into punitive cost of living increases for hard-pressed families. And business and governments together need to face up to the investments needed to boost shipping capacity over the medium term. We need supply networks to learn the real lessons of this crisis and find their new normal. But the real answers will not be found in the chimera of reshoring, which in reality is nothing more than a form of populist protectionism, which only concentrates risk and increases prices for consumers. The investment picture, however, is much more worrying. Naturally, the pandemic had a greater impact on investment than trade. After all, transporting goods around the world requires little physical human interaction. But acquiring a firm or establishing a new production facility in another country actually requires travel, often to meet potential partners, and in many cases, close contacts with foreign governments to obtain the permits necessary for the investment. Pandemic-induced border closures and travel restrictions have obviously made this much more difficult. Accordingly, governments wishing to increase investment flows must prioritize breaking the back of this pandemic and safely reopening borders and economies. Fundamentally, that requires getting vaccines, tests, and treatments distributed equitably around the world as quickly as possible. And that is why the global business community, and ICC in particular, calls on governments to fully and immediately fund the ACT Accelerator to enable those vaccines to flow, not as an act of charity, but as a first-order investment priority. But the business community is not only concerned with how to increase the quantity of investment, but how to get the right quality investment that will enable us to achieve the Sustainable Development Goals. Because the reality is that around $6.3 trillion worth of infrastructure investment is required each year up to 2030 to meet development goals. And a significant proportion of this will have to come from the private sector, be it companies, financial institutions, banks, or long-term investors such as pension funds. Doing this requires creating the right incentives for the private sector to shift funds into sustainable investments. Above all, governments must get the investment climate right, which for business means predictability, transparency, and efficiency as they seek to assess and mitigate their risks when investing abroad. Our ICC investment guidelines set out principles for both investors and governments on a range of issues, from ownership and management, finance, fiscal policies, to anti-corruption and technology. And I encourage all governments to adopt these principles as a means of encouraging responsible and sustainable investments in our post-COVID and hopefully very, very post-COVID world. There is also much more that can be done. We need to support the development of ESG and impact investing through truly global harmonized regulations, metrics, and reporting standards. And we need governments to improve the attractiveness of sustainable investment projects and bring in the private sector through public-private partnerships. Finally, governments must not only get their domestic policy settings right, but they must also tend more to the multilateral trading system in which we all operate. For too long, governments have taken trade rules with the WTO at its centre for granted. Business has heard much rhetoric on the need for reform from politicians, but has seen very little action. Every year, ministers profess commitment to the system, but ultimately shy away from making any compromises or concessions that enable agreement. As a result now, 2 months out from the next WTO ministerial conference, the world looks set to simply roll over today's problems to tomorrow. Business looks at this situation and says this is just not good enough. The WTO and its ability to write rules and adjudicate disputes matters deeply to global business everywhere in the world, and business is looking to ministers for leadership. Don't shy away. We want your ambition. We want you to compromise where necessary and to make the decisions that the national interest is actually served by preserving and enhancing the world trading system. If we do not do that, the WTO continues to ossify and will become less relevant by the day. And that, let me be clear, is not what business wants or needs. To conclude, boosting investment requires successfully fighting COVID-19, getting the fundamental domestic settings right, and strengthening the multilateral trading system. But we also need to ensure investments help drive sustainable development, which we can only do if we create incentives for the private sector to allow its funds to flow in that direction, and if the public and private sectors work together effectively to design these systems. That's collaboration. I wish you a great World Investment Forum from the International Chamber of Commerce.
Thank you, Mr. Denton, for your speech. I now have the pleasure to invite Ms. Nandini Sukuma, CEO of the World Federation of Exchanges, to address the forum.
Thank you. And thank you for this distinguished invitation to join you all representing the voice of capital markets. The World Investment Forum is a flagship meeting always for all of us in the capital markets. It comes this year at a key moment. The WFE and its members, WFE members are home to approximately 50,000 listed companies around the world, both in developing markets, emerging markets, developed and frontier. The market capitalization of the entities listed on our exchanges is over 109 trillion, and about 137 trillion pass through the market infrastructures that our members safeguard. So for us, the World Investment Forum is a key convention to discuss, listen, and catalyze action. We meet in the midst of a time of pandemic and sickness. Our virtual meeting reminds us today of how much our lives have changed. But this meeting also reminds us of the opportunity we have before us to build back better, as has been said by several other previous speakers, and to build back better in a period that will define how generations think and behave. Representing the voice of capital markets today at the summit, I want to start by saying how committed we are to mobilizing the capital that is required to meet the SDGs, and how committed we are to funding those projects that will enable the green transition. And now, thinking about the events of the last 18 months, all of which has focused our minds. It has focused our minds on how important those goals that we have mentioned before are, and also it has focused our minds on why they are important and what we must all do to achieve them. So what are the lessons of the last 18 months? What have they taught us? And what must we carry into the future? And for that, I would like to offer you today 5 themes for reflection and for action, because we are here for action. The first, keeping public markets open at times of volatility and stress. The past 18 months have seen attempts to shutter public markets with the argument that this will calm volatility. This is counterproductive. For the capital market ecosystem to champion the integrity of markets as the foundation of economic growth and welfare, we must keep public markets open. We must advocate for markets and market structures that are resilient, robust, and stable in the midst of both turmoil and innovation. We must seek to enable the free flow of capital globally through regulated public market infrastructures. But we can only do this when we also champion the necessity of public markets remaining open to fulfill those aims. The second follows directly from the first theme. How can we all collectively support companies and investors? As markets remained open during the pandemic for capital raising, for trading, for hedging and mitigating risk, and to facilitate price formation, investors and companies used them. We need to do more, both by creating enabling policy levers and by promoting the use of public markets. To give you a snapshot, on average, WFE member exchanges handled 31 million trades per month from 2015 to 2019. That's a 5-year period. They handled 53.6 million trades per month during the year 2020. That's a 73% increase in the number handled by the exchanges. In the first half of 2020, compared to the second half of 2019, the peak of the pandemic, if you would like to say, equity markets saw record high values of traded up 50% and volumes up 47%. In June 2020, again, companies raised $32 billion in US dollars through IPOs. That's nearly triple an increase on May 2020. So the June figure is among the highest capital amount raised. So markets are open, capital markets are open to fund the recovery, a green recovery, but we must use them. The third, the importance of building and fostering an environment for green investment of all kinds. The United Nations has been the flag bearer for this message. This meeting, the World Investment Forum, is the foremost meeting that discusses the challenges and identifies the opportunities. Your work and your role here today has never been more important. We commend you. We stand ready also to assist you in every way. And I look forward to hearing more about the world we must build over the course of the week, and to understand and to speak about how capital markets can be part of that solution, that green future that we are building. The fourth, we've spoken about a little bit, but I want to speak now more specifically about inclusive growth. What we have seen, not just in the last 18 months, but over the last 5 years, is the rise of retail investor participation globally. This is in diverse markets and under diverse conditions: frontier markets, emerging markets, the world's largest markets. From January 2015 to September 2020, on average, the number of retail trades increased by almost 400%. The value increased by 350%, and the number of retail accounts increased by nearly 300%. About 57% of our markets across the world found retail participation has grown in the last 5 years, and all are expecting that trend to continue. COVID-19 and the circumstances of the last 18 months increased retail participation. The increase we have attributed to a decline in foreign institutional investor participation, to high volatility, national currency depreciation risks, lockdown, people work from home, so they're saving more, so they have more to spend and are spending it in capital markets. A booming market, we spoke about the IPOs, technology being that enabling force. Another driving trend has been digitalization, attractive entry points and new listings. So we are seeing a new generation come to use public markets. This is a tremendous opportunity for all of us here today. But with that opportunity comes responsibility. It comes great responsibility. And we must proceed with care. We must bolster investor education and ensure investor protection is enshrined as a doctrine everywhere. And all of that speaks to the public policy work that is before us. And finally, before I conclude, I would like to speak briefly about the role of private markets versus public capital markets. And I'm speaking private capital markets versus public capital markets. I start with a sobering data point. Capital allocated to private markets has tripled since the global financial crisis. It's now 7.7 trillion US dollars from about 2.5 trillion US dollars. Private markets are a bigger and deeper component of institutional portfolios than ever before, making up 6.3% of public market size. And that compares with 3.8%, before the global financial crisis. An inclusive recovery, the recovery that we are all thinking about, that we are all focused on building, it must address this imbalance. Without thriving public markets, which everyone can access with confidence, and with certainty that there is investor protection and regulation enshrined in the doctrine, we will not be able to drive forward that ambitious sustainable growth agenda that we have all discussed. We must, for the agenda for recovery and growth across emerging markets, across developed markets, across every market, we must have thriving public capital markets. But I want to conclude on a note of optimism. The work before us is considerable, but by addressing the 5 themes outlined, we will have a path forward. In 2021, this meeting is talking about, the theme of this meeting is talking about investing in a sustainable recovery. We can do that. The UN, public markets, and the capital market ecosystem are needed to build that new world together. And I'm confident that together, with our respective complementary parts, our ideas, and our passion, we can do that. I wish you every success as we start the beginning of this very important discussion and meeting to think and find the solutions that we know exist. Thank you.
Thank you, Mrs. Kumar. This closes the opening ceremony of the 2021 World Investment Forum. 3 Global Leaders Investment Summits will follow. Thank you.
Excellencies, ladies and gentlemen, it is now my pleasure to welcome you to the first Global Leaders Investment Summit on investing in sustainable recovery. In fact, we have 3 summit sessions. The forum's summit segments provide a platform for global leaders from government, business, and the international community to present their vision for the future of investment and sustainable development. The summit today will address 3 questions. What national, regional, and global policy approaches are best suited to restart the engine of international production and restore supply chains? How can governments, the private sector, and the international community to remobilize, rechannel, and reintegrate investment in SDGs, particularly in the poorest countries? What can the United Nations contribute to the support of these efforts? We have an outstanding lineup of speakers. They are His Excellency Mr. Armen Sarkisyan, President of the Republic of Armenia. His Excellency Mokgweetsi Masisi, President of the Republic of Botswana. His Excellency Mr. Carlos Alvarado Crisada, President of the Republic of Costa Rica. And His Excellency Mr. Luis Binada Corona, President of the Dominican Republic. And Mr. Bill Winters, CEO of Standard Chartered, Mr. Ignacio Galán, Chairman and CEO of Iberdrola, and Mr. Maximin Narasimhan, CEO of Reckitt, and Mr. Sven Dahl Holsetter, CEO of Yara, and Mr. John Haley, CEO of Willis Towers Watson. We have 90 minutes and 9 high-level speakers to shed light on these very important questions. It is now my honor to invite the first speaker, His Excellency, Mr. Armen Sarkisyan, the President of the Republic of Armenia.
Your Excellencies, dear friends, it's a great pleasure to once again address the World Investment Forum and speak of Armenia's vision for sustainable development. The Republic of Armenia has been firmly committed to the implementation of the Agenda 2030 for sustainable development. In our view, sustainable development goals are representing a kind of a test both for nations and for international community. From international perspective, the process is and will continue to display to what extent the member states are ready for cooperation at regional and international levels in implementing these targets. From the national point of view, it will help to reveal the strong and weak sides of the practical implementation of our goals. This is indeed a unique period of time we all are living. The continuing COVID-19 pandemic has had a massive global impact, causing millions of deaths, crippling world economy and overstraining the healthcare systems throughout the globe and nationally as well. It has closed our systems, our borders, reshuffled our priorities. It has certainly become the #1 topic of deliberation on the international arena. COVID-19 is expected to considerably weaken the progress of implementation of Sdgs in many countries, including in Armenia. The pandemic has not been forgiving for our joint efforts aimed at releasing the Sustainable Development Agenda. It illustrates vividly the scale of inequalities between states and particularly in terms of vaccine distribution as well. Without global efforts, it would prove impossible to fully contain these problems and to return to normal life. That's why international cooperation is important. A number of CDG areas took an immense hit and would require renewed efforts to reach the foreseen outcomes by 2030. Climate change should remain a key area of global action. As a landlocked developing country, we are convinced that international support for the development and implementation of climate-related policies is of crucial importance. The support of international community can have a significant impact on the climate-resilient development of our economies in line with the SDG. Armenia is the 4th most vulnerable country to climate change in Eastern Europe and Central Asia region. We must then have green growth at the core of our economic vision for the future. That's why we will continue supporting nuclear energy development in Armenia. That's why Armenia has signed a partnership with Masdar to develop solar energy in massive scale in Armenia as well. A vision of resilient and low carbon growth based on the ecosystem approach, reforestation and investments in renewable energy is our goal. There are still gaps in the process of CDG implementations in Armenia. The efforts need to be doubled to overcome the general challenges, and the challenges are legislation concerning equality, energy efficiency, and sustainable use of natural resources, also legal reforms. And here is where Armenia has come with a new idea, new approach, how to deal with international debt and how to convert that international debt into activities to support nature and basically fight against climate change. Speaking about sustainable development, I would like also to stress the importance of developing modern technologies. In this context, I would like to present to you ATOM, Advance Tomorrow, presidential initiative, the project with consistent of 3 elements. Aims at the bringing to Armenia leading IT and technology companies, biotechnology companies, to develop artificial intelligence, mathematical modeling, development of machine learning, and implementation of educational programs. The preliminary agreements has already been achieved with several multinational companies. ATOM should be a platform as well as a scientific center, a small town of the future, and an institute which will shape the culture of new life. The life where we support and know the value of our nature. Wherever conflicts occur, one cannot speak of sustainable development, a striking example of which is the recent war in Artsakh, Nagorno-Karabakh, a real humanitarian catastrophe. Armenia considers the Sustainable Development Goals and the EAP as an important framework of international cooperation to make the best use of promoting natural agenda and national agenda, reforms and developments within its scope, and stand working closely with international community to build a better world for us and for the whole world. Thank you very much. I wish all of you success in your conference, and I hope one day to greet all of you in Armenia.
Thank you, Mr. President. Interesting to hear about Armenia's commitment to 2030 agenda and its focus on developing new technology. We'll now hear from His Excellency, Mr. Mokwesi Masisi, President of the Republic of Botswana.
Your Excellency, Ms. Rebecca Grimspan, the Secretary General of the United Nations Conference on Trade and Development, UNTAD, dear Excellencies and colleagues, distinguished participants, allow me to preface my remarks by congratulating Your Excellency, Rebecca Grimspan, on your appointment as the Secretary General of the United Nations Conference on Trade and Development, becoming the first woman to occupy this high office. Your impressive record of accomplishments, including the service you rendered as Vice President of Costa Rica, your home country, and in the leadership positions at the United Nations Development Program, reflects your competence to ably lead the execution of the mandate of this Trade and Development Agency. Allow me to also acknowledge the successes of your predecessor, Dr. Mukisa Kiduyu, when he was at the helm of this organization. On behalf of the people of the Republic of Botswana, and indeed on my own behalf, I want to assure you of our support and the readiness of the Botswana delegation to assist your efforts as you steer our organization in the next 4 years. The 7th World Investment Forum is taking place during unprecedented times, occasioned by the challenges of the COVID-19 pandemic that is testing the limits of global solidarity, multilateralism, and the resolve of the international community. We therefore welcome the theme of this opening summit, in open quotation, investing in sustainable recovery, close quotation. This theme is consistent with the high-level political forum themed the sustainable, resilient, and inclusive recovery from the COVID-19 pandemic. The gravity and devastation of COVID-19, as well as its toll on the livelihoods of people, economies, and its impact on the implementation of the Sustainable Development Goals, was also echoed at the 76th session of the United Nations General Assembly that concluded a month ago. The global pandemic has had a severe impact on investment flows in general and depressed investments in the SDGs in particular, with some of the achievements made during the years 2015 to 2019 now in danger of reversal. It is therefore essential for the global community to remobilize investment, channel it towards SDG sectors in order to mitigate the unique challenges faced by least developed countries, landlocked developing countries, and special situations faced by middle-income countries. Botswana has successfully aligned her National Vision 2036 to the 2030 Global Agenda. At the regional level, the African Union Agenda 2063 has been aligned with the Southern Africa Development Community, SADC, Integration Agenda, which in turn is also aligned to the 2030 Agenda for Sustainable Development. In keeping with this people-centered approach to investing in local communities to coexist with the natural environment, Botswana has developed a number of programs aimed at supporting vulnerable groups, including the establishment of the National Environment Fund, NEF, which provides financial support for projects that are geared towards the protection and conservation of the environment. Madam Secretary General, in terms of building resilience through responsive policy frameworks, Botswana adopted a national climate change policy in 2021. The policy reflects Botswana's commitment to combat climate change, which is a 15% gas emission reduction pledge on 2010 base by year 2030. This gas emission reduction target represents green economy opportunities as a result of transitioning from current energy sources. Other national actions and initiatives were developed with the aim of building the resilience of key economic sectors and strengthening adaptive capacities, especially in rural areas where most segments of the adult population live. This includes development of a national drought management plan to address the socio-economic and environmental impacts of drought affecting the rural community populace due to their dependence on rain-fed agriculture. Madam Secretary General, while the multifaceted impact of the pandemic on our health systems in particular were monumental, the shock waves of the pandemic has left in its wake the financial standing of our governments seriously encumbered. It has also exposed deep inequalities within and among nations while reinforcing fault lines between countries and their chances of recovery. I am confident that this forum is well primed to specifically tackle the challenges and opportunities arising from the crisis. We have already witnessed that some of the best solutions are found within the innovation space and building back better sustainably together. Madam Secretary General, UNTAG's leadership role of coordinated trade and development operations at national and regional levels under the UN Interagency Cluster on Trade and Productive Capacity could prove indispensable in identifying potential partners for collaboration. Inspired by the potential benefits offered by the fourth industrial revolution, Botswana has ambitious goals in the technology and innovation space. In order to deliver real economic value, economic transformation, and sustainable jobs for our people, particularly the youth. Although we have not traveled a great distance, we remain undeterred and determined in this noble ambition. To give effect to our stated objectives, government has embarked on a digitization initiative named Smart Bots, aimed at digital transformation for Botswana. The project targets village connectivity, including health facilities, connecting every school and learner to the internet and other service centers. We therefore believe that this forum presents an opportunity to reignite investment, both domestic and international, as an engine of growth. Botswana provides a secure environment for your investment and business and stands ready to welcome investing in sustainable recovery in key sectors of our economy, namely agriculture, automotive industry, cargo freight and logistics, education, financial and business services, health, ICT, manufacturing, mining, and tourism. Madam Secretary General, let me conclude my remarks by thanking you and reaffirming Botswana's readiness to continue working with UNCTAD and other partners to make this theme, investing in sustainable recovery, a reality. I thank you most humbly.
Thank you very much, President Masisi, for your kind words for the World Investment Forum. And also thank you for sharing with us your strategies and action for people-centered investment in sustainable development. We will now hear from His Excellency, Mr. Carlos Alvarado Crisada, President of the Republic of Costa Rica.
For me, it's a pleasure to address you all in this relevant meeting about sustainable recovery. In today's world, investment, it's not only about jobs, it's also about purpose and sustainability. How can one explain that a Central American country of 5 million people has more than 350 multinational companies working and operating in Costa Rica? I believe the key of that investment and the key of recovery has a lot to do with sustainability. And that happens in terms of people, planet, and purpose. People, because in Costa Rica, we invest in the education and health of our population. Actually, that has helped us during the pandemic. But that is a key asset. Human talent is the way in which we leverage to attract all those investments. We have for the past decades worked on an ecosystem to attract that investment, but also to target it with purpose. That is how we change our economy based on exporting commodities by diversifying now. And now our main export, for example, is medical devices. And that we can do because of our human talent. People, it's the key in recovery. Also, planet, the sustainability. Costa Rica's electric grid is 99.5% clean and renewable. That means that everything you produce out of electricity in Costa Rica, you produce without a carbon footprint. So that can also provide purpose, because in today's world, that's what people are looking for. New consumers are more demanding about how what they produce or what they consume is produced. That's why we need to think also in terms of the planet. In today's world, we cannot invest or create jobs if we do not think about the present and the future generation in terms of sustainability. That's thinking about our planet. But you see, that's also profitable. People tend to think that investment and sustainability cannot match together. But that's not true. In Costa Rica, we have experienced how our conservation of forests has triggered our ecotourism industry, a clean industry, for example. But also, more and more, many companies come to Costa Rica because of our sustainability traits. Let me give you some examples. Most recently, Bayer created a factory in Costa Rica, a large investment to develop medical devices and pharma devices, contraceptive devices for women, particularly for women in the poor and developing countries. And they decided to come to Costa Rica because there was an alignment between the values of Bayer and of the country. Also recently, Intel decided to expand and open a plant to produce microprocessors in Costa Rica. That because of our traits and our human talent. And also in another different industry, for example, Chanel came to Costa Rica to our Blue Zone in Nicoya to explore possibilities for products of anti-aging capacities. Those brief examples show that investment in a context of COVID-19 for recovery has to do also with purpose. A purpose for a better humanity, a one that leaves no one behind. And more, we understand as humanity that we cannot progress if we do not put together investments, jobs, sustainability, and the cooperation between different parties. This is a great opportunity to think in terms of the industry and also think in terms of humanity, not thinking only in silos, but thinking globally and in a holistic way. Thank you very much.
Thank you, Mr. President, for sharing how Costa Rica links investment to sustainability and how your focus on people, planet, and purpose in the pandemic recovery has paid off. May I now invite His Excellency, Mr. Luis Abinader Corona, President of the Dominican Republic, to give us his government's perspective.
Your Excellency, President, Your Excellencies, Heads of State who are present today, Mrs. Amina Mohammed, Secretary General of UNCTAD, ladies and gentlemen, panelists, speakers, and to all attendees. Ladies and gentlemen, this meeting is an excellent opportunity to think about the drastic changes which have taken place in the world since the last time we were together. Investment fell considerably last year compared with the year before, and this has brought us back to the level that we had 15 years ago, something almost unknown. Total foreign investment has dropped in individual countries and indeed globally, and has suggested that full recovery is not likely to start before 2022. We think that UNCTAD's work is essential to help us understand the scale of current problems, but also in order to provide investment and industrial development guidelines which will help us to achieve a more strong and sustainable recovery. We have therefore come to this forum in order to contribute to the effort to understand how, on the basis of a multilateral approach, we can combine policies, resources, and knowledge to help us recover from and emerge more quickly and more successfully from the current crisis. In most of the emerging countries, we also have to look at climate change and how to adapt to the fourth industrial revolution, how to use new technologies better, and how to make work and production more automated. As we emerge from the pandemic, economic issues and an upsurge of violence in many areas of the world have made it difficult for us to contemplate fully achieving certain SDGs. Countries have been left indebted, economies have been left shuttered, and many people have been left much worse off than before. We haven't yet been able to tackle the economic or the climate change impacts properly, and investment needs to be made now in a socially responsible way that will help us to achieve social progress for all individuals and countries. Attracting greater flows of foreign direct investment is something which will be vital, not only now, but in the post-pandemic period, so that we can reactivate shorter and less fragmented global value chains in which all regions and countries can benefit. Nearshoring is a policy that may be beneficial to those countries which can use their industrial ecosystems, their geographical location close to major markets, and trade agreements, including investment policies, to benefit. It is important that we make sure that production is close to major consumer centers, because this will encourage social progress and help us to protect democracy, slow down irregular migration, and promote regional integration. If we look at internal and regional consumption patterns correctly, then we can direct institutional and private capital flows into sectors such as infrastructure development, scientific innovation, health, renewable energy, water, sanitation, and agriculture and food production that much better. We are going to need to be creative in order to build resilient and adaptable societies as we emerge from the pandemic. Returning to the pre-COVID-19 pandemic world may not be possible, so we need to build a different one and one which is better. In conclusion, I'd like to thank UNCTAD and my dear friend Rebecca Greenspan is Secretary General for issuing us an invitation to participate in this important forum. I would like to wish the forum full success and hope that together we can make more headway towards resilient, sustainable, and fairer development across the world. Thank you.
Thank you, Mr. President Corona, for those interesting remarks. UNCTAD stands ready to help Dominican Republic in its pursuit of new investment opportunities in priority sectors. Now, ladies and gentlemen, allow me to move on to the group of business leaders that will share their reflections on the future of investment and sustainable development. First is the CEO of Standard Chartered, Bill Winters.
Thank you very much for giving me a chance to make a few comments at the World Investment Forum, especially alongside such a distinguished group of co-panelists. I'll make a few comments about the global investment scene and how we see things evolving, what we see as important changes in or around the COVID pandemic, but also what we see as some more structural changes. Of course, we expect those to be more enduring. First, by way of the economy, the economic backdrop is encouraging. Despite the severe contraction last year, 3.3% contraction in global growth, we know we've rebounded strongly this year up to expected 5.8% growth and expect that to continue through to next year at about 4.2% growth. So above the pre-pandemic growth levels and the expectations, but for the pandemic. Of course, this is accompanied by substantial monetary and fiscal support, which is in the process of gently withdrawing. So we'll have to watch very carefully. Apart from the challenges around the withdrawal of government support, we will be watching very carefully this range of things that could disrupt the recovery of strong economic growth, whether it's vaccine hesitancy, the arrival of new variants. And of course, we're watching carefully the energy price increases and inflation, judging whether these are transitory or more structural. There are clearly transitory, there's some transitory impetus for the inflation increase, but I think it's safe to say that there's likely some structural change in inflation expectations as well, especially as the supply chain disruptions and other factors contributing to inflation take hold and are difficult to resolve. But one of the big open questions. One of the interesting things about this crisis versus earlier crises is the degree to which trade initially contracted quite substantially, but then rebounded equally quickly. Very, very encouraging to see that by the end of 2020, we were generating trading volumes in excess of the pre-pandemic levels. This is most encouraging, about 2.8% higher, in fact. Perhaps as encouraging, and more so, is that emerging markets recovered even faster than the developed economies. This is a trend that's important, and it's happening alongside the very critical reconfiguration of supply chains. So when we look at the way that investment trends have changed during and after the pandemic, or as we recovered from the pandemic, two very noteworthy trends are well established. One is the acceleration of all things digital. Now, we don't need to spend too much time on that because we've all experienced it very much personally, including as we are right now with a virtual presentation from various speakers. But we know that that's also changed the way people think about investing, and has changed the way that investment flows are executed. Perhaps the more structural change, which was underway before the pandemic took hold but has accelerated, is the reconfiguration of supply chains. Now we know that the part of the motivation for the reconfiguration of supply chains is the clear observation, both during the pandemic and now during the recovery phase, where we have these supply disruptions, for various reasons that we could explore, that people are moving from a long established trend of just-in-time inventory management to just-in-case inventory management. So in other words, a shift from a focus on efficiency, optimizing working capital, to a focus on resilience and making sure that your supply is there. Now, we've done quite a bit of research in Standard Chartered on this. We've looked at both at the reconfiguration of supply chains and also the more specific reshoring. And as we've discussed this with broad ranges of multinational and other corporations, we see a primary focus on corporations reducing their concentration risk, diversifying their sources of supply, and secondarily, managing their costs. So when we look in particular at the impact on China and see a meaningful reconfiguration of supply chains away from the China export capability, China, of course, having been the world's manufacturer and still is in many regards, the primary motivation, as we understand it from our clients, is around diversification. The secondary motivation is around cost. We did, for example, we've been doing a survey for 12 years now with corporations operating in the Greater Bay Area. And the overwhelming focus for those corporations in terms of identifying the reasons for their own relocation have been around diversification. Now, that said, China's role remains absolutely critical in the global supply chains. We don't see that diminishing materially. We do see a shift in the nature of the exports and the balancing of both the Chinese and the global economy. It's clear that we need greater investments in climate and sustainable outcomes, particularly in emerging markets. The COVID pandemic laid bare the issues of rising inequality in our markets. A new estimate for the COVID-induced global poor is expected to be upwards of 115 million additional people in poverty. We've also seen the dramatic focus on climate change and the need for investments. We did a piece of research called Zeronomics, where 85% of companies, multinationals that we surveyed, indicated that they would need a medium to high investment to achieve their net zero targets. 78% of senior executives, 71% of investors expect the largest transition capital shortfall to be in carbon intensive sectors, in particular in emerging markets. We know that only 13% of the money that's available for transition financing is available in the emerging or to the emerging markets, or with a specific focus on SDG linked investments. Only 10% of the AUM is available in the Middle East, Africa, and South America combined. We further know that this investment in climate change technology is critical, not just for the greener economy, but also for the co-benefits that they generate. You could estimate that something like 24 million new jobs by 2030 on the back of the substantial investment needed for a climate transition, which we estimate to be something like $30 trillion through to 2030. But of course, the challenge is wider than just climate. Universal access to basic water and sanitation, so SDG 6, it would result in something like $18.5 billion in economic benefits each year from avoided deaths alone. And we know that every $1 invested in water and sanitation provides $4 of economic return. So the need for investment is clear. The availability of financing is clear. There is a disconnect between the source and the need for funding. This will require private markets to cooperate extensively with public catalyzing capital through blended finance or other means in order to address what is one of the more critical investment challenges of our day, partially COVID related, partially not. But the need to work in a collaborative way has never been greater than right now. Thank you.
Thank you, Mr. Winters, for sharing your outlook on global investment trends and patterns in the reconfiguration of global supply chains in the post-pandemic era. We'll now hear from the chairman and CEO of IFRAPDORA, Mr. Ignacio Galán.
Thank you very much for inviting me to this World Investment Forum. I would like to start sending my warmest congratulations to my good friend, Rebecca Grispan. I'm sure she will bring this institution the same passion and knowledge she has shown during all her career. Year after year, we have obtained clear data showing the urgency of the fight against climate change. But today, we also know that investing in green economy is the best way to accelerate economic recovery and create sustainable growth and jobs. So decarbonization cannot be just one part of our policies. It should be our economic policy. We have everything to succeed. There is a consensus of public authorities, civil society, and private sector. Everybody's on board. This was very different when we started pushing 20 years ago. We also have a leadership with Rica Greenspan joining forces with Secretary General Guterres and Patricia Espinosa. We have the technology. Electrification through renewables, smart grids, and storage is the most efficient way to decarbonize our economies. We have the opportunity to run faster if we use recovery funds to incentivize private investment. We at Iberdrola are ready to do our part. Over the last 20 years, we have invested more than 120 billion euros in renewables, smart grids, and storage. We have proven that it's possible to combine a profitable business model with the creation of sustainable value for all. We have multiplied our size by 6 times, reducing our emission to less than 1/6 of our peers, and sustaining 400,000 jobs across the world. But we cannot stop here. According to International Energy Agency, reaching net zero by 2050 will require tripling investment in the next 10 years. That's why Iberdrola plans to invest 150 billion euros in the coming decade to become carbon neutral 20 years ahead of the European Union, just in 2030, and to continue creating wealth and jobs in the industries of the future. But we want to be very clear. To benefit from this opportunity, we need clear and stable framework to give investors security and confidence. We also need faster administrative process to accelerate expansion of renewable networks and storage. Today, it takes 4 or 5 years to have a permit for a solar or wind farm, and only 1 year to build it. If we want to reduce emissions already by 2030, we have to be faster. And tax policies must be based on the polluters pay principle, promoting clean energies and penalizing polluting technologies. Unfortunately, we still see some governments doing the opposite. I have been attending every COP since Copenhagen, and the COP26 in Glasgow will be the right time to increase global ambition. We need clear objectives and commitment from everyone to consolidate transition in developed countries, but also in emerging economies. The potential for renewables in Africa, Latin America, and Asia is huge. There is no more time for words. We need global action. Thank you very much again, and congratulations for the great job of the World Investment Forum.
Thank you, Mr. Gallen, for this insight into your sector's journey to the net zero. It is my great pleasure to introduce the closing panel with CEO Reckitt, CEO Yara, and CEO Willis Tower Watson. Mr. Narasimhan, we would love to hear about the Reckitt's investment strategy to support the delivery of the SDGs and how the pandemic has influenced it. And also, what policy instruments you could see to accelerate the investment in the Sustainable Development Goals.
Well, thank you for the opportunity to join you all today. I am honored to be on such a distinguished panel here. Reckitt is a global leader in hygiene, health, and in nutrition. We have a proud 200-year heritage. Our portfolio of consumer brands like Dettol, Lysol, Durex, Finish, Airwick, Vanish, Harpic, Enfamil, and Mortein are used by more than 20 million people each day in 190 countries around the world. COVID-19 has had a hugely disruptive impact on global trade flows and investment over the last 18 months. And this is likely to continue for some time. During this period, our priorities have been to ensure that our colleagues, 43,000 colleagues that we have around the world, are safe, to ensure the resilience of our global supply chains, and to continue to serve the growing needs of our consumers and our customers, particularly given our focus on hygiene. I cannot stress enough how important the collaboration with governments has been to maintain the open global trade flows. And this has helped us to safeguard the supply of basic life-saving products that are also critical to reducing the risk of any future pandemics that you might have. Going forward, we therefore must collectively prioritize the investment in basic hygiene, clean water, and sanitation, which are essential to delivering SDGs. Goals 3 and 6. Global free trade has enabled more goods to travel, more services to be accessed by more people, to enjoy consumer benefits, as well as having contributed overall to stimulating growth and prosperity in many countries around the world. But we also know that the trading system must adapt to the growing social concerns and the societal concerns about globalization. This is, in fact, this globalization paradox. The issues for which globalization is absolutely critical for is also the source of some of the criticism that it is achieving and getting. So as we kickstart this post-COVID-19 global economy, the priority for us is to do, in many ways, that which is more inclusive and that addresses the major societal challenges of climate change, biodiversity loss, and public health. Our purpose at Reckitt drives everything we do and defines the impact we want to have in the world. We exist to protect, heal, and nurture in the relentless pursuit of a cleaner and healthier world. Each of our global brands has a purpose that delivers an SDG. Our bold ambition by 2030 is to reach half the world's population with brands that help people live cleaner and healthier lives. We also aim to engage 2 billion people each year to make a positive societal impact. Furthermore, we've adopted our sustainability ambitions for 2030 with 3 key pillars: to ensure that 50% of our net revenues from more sustainable products, to be net zero by 2040 and reduce our greenhouse gas emissions by 65% by 2030, and to treat people fairly across our value chains. We plan to invest over £1 billion now between now and 2030 to support the delivery of these ambitions. This has major implications for how we run our business, from how and where we source these sustainable materials, for how we innovate our brands, for how we green our operations and distribution networks, and lastly, how we market our brands and drive consumer behavior to encourage more sustainable purchasing and consumption patterns. What this requires is joined up, multilateral, multi-sector solutions, which I know you care about deeply as well, working across the private sector, the public sector, and the social sector. We cannot do this any other way. Governments, of course, have a huge role to play in making this happen and creating the right enabling environment for us. And I have 3 examples where I think they could help us make a big difference. First, we have set internal positive procurement policies for more sustainable materials, but we need to ensure that these efforts are recognized and rewarded externally. Reducing tariffs on more sustainable materials and finished goods could help facilitate this. Second, as we move to a more circular, low-carbon economy, this drives the use of recycled materials. And we see significant opportunities in ensuring we have common global standards to stimulate the reverse infrastructure and supply chains that we know is required. Third, as we green our manufacturing and distribution systems, we must accelerate the adoption of low-carbon technologies, such as hydrogen, enabling these greener alternatives to compete on a level playing field with higher emissions technologies. Thank you for your kind attention in what is a crucial time for this work.
Very interesting insights into your SDG investment strategy, and also excellent examples of policy instruments which could help your sector accelerate investment in SDGs. We'll now hear from Mr. Sven Paul Holsetter, the CEO of Yara. Mr. Holsetter, how is Yara's investment strategy supporting the delivery of the Sustainable Development Goals?
Thank you so much for this opportunity. Firstly, I want to share what's keeping me up at night. We're now less than 3,000 days from 2030, meaning time is running out and urgent action is now needed. It's really now or never when it comes to investing in a more sustainable future. The Charney report already back in 1979 predicted what would happen to the climate if we continue to increase emissions. And I often ask myself, why haven't we done more earlier? And a few years ago, I was part of the Business and Sustainable Development Commission. We looked at the business opportunities of linking businesses to the UN Sustainable Development Goals. And the conclusion was very clear. There is a business opportunity of $12,000 trillion of value creation in this. So we know about the dangers and we know about the opportunities. So why haven't we come further? And I see three key shifts that must happen in order to enable sustainable investment. The first one is trust, a scarce yet very essential resource. The second is equity or inclusive growth. And the third is having a rule-based regulatory framework. We in the business world have a tradition or come from a tradition of working in our own self-interest, maximizing our own profit. But that's a very short-term view. 2030 is around the corner, and we will never deliver on the Paris Agreement if we continue to think in quarters. The only way forward is to think and work in strong partnerships. At Yara, we're investing in partnerships in sustainable farming and in the green hydrogen economy. And the reason we have been successful is because we have been seen as a trusted partner. With trust, we can solve almost anything. And without it, we can't even agree on the smallest things. My second point is equity, creating inclusive growth. We must embrace an economic model which is not only low carbon, but also fights poverty and inequality. We cannot afford to leave anyone behind. And when I look at how Yara is investing, it's about helping farmers to become more profitable and more sustainable, in other words, to produce more with less. Our food system is at the heart of the SDGs, whether it's zero hunger, gender, water, decent work, climate, and it's often seen as a problem. The food system of the future is also a solution to these issues. Over the last 5 years, we have accelerated our investments into farmer-centric technology and into sustainable solutions. So the only way to transition to a nature-positive food future is to close the knowledge gap and to close the income gap of those growing our precious and nutritious food. And here, the private sector has a large responsibility, both in trust and in inclusive growth. My third point, however, relates to the public sector. More specifically, how a regulatory framework can support investments that turn into support the Sustainable Development Goals. We must continue with a rule-based multilateral system, and this gives us the predictability needed for long-term investments. We have seen over recent years protectionism on the rise, but that is definitely a dead end. In a post-COVID world, we need more trade, we need more collaboration. And as a business leader, I'm ready for huge investments in decarbonizing the food chain and also to help decarbonize the shipping industry. But not without the regulatory framework with the right incentives and predictability. And I don't ask for any first mover advantages, but at least not first mover disadvantages. What we need is a level playing field with respect to subsidies, state-owned enterprises, trade remedies, and government procurement, and domestic regulation across industrial, agriculture, and service sectors. So at the end, if I try to sum up my three main points, it goes something like this. We can only get this done through trust and make sure that we have everyone with us. And at the center of all of this is a predictable and rules-based system that drives long-term investment. Thank you very much.
Now that we have heard from our panelists, we'll open the Q&A part of the session. First, allow me to go back to Mr. Narasimhan, the CEO of Reckitt. Mr. Narasimhan, we heard from you during your intervention about SDG-related investment opportunities. I would be interested to also hear one or two examples of where you see some real barriers or challenges to progress in global trade and investment.
Well, thank you for your question, and thank you for having me back. A stable and open global trading environment is crucial, and clearly trade policies really help provide that sort of stability, while at the same time, if they were not in place, you would see cost increases, you would see greater volatility. And whenever you have greater volatility, what happens is it has an impact on the level as well as the pace of investment that is made. So it's quite important that actually there's a framework that is quite stable as we go. And the stability of this trade environment is also important in the context of it being a level playing field. Because if you have policies and standards that are level, it enables stronger and simpler and even better trade, which is in support of the SDGs. Part of it being, the fact that it's more inclusive. It doesn't exclude participants because of the fact that they are adhering to a set of standards that are not necessarily common. So having that sort of common level, stable playing field makes it easier to access the kind of things one needs to do because investments get made. This can support emission reductions. The challenge, of course, is as countries move in different ways and different speeds towards decarbonization, national regulations can actually impact, by the sort of emissions that are embedded in traded goods imported from other countries, which may have different and divergent regulations. And this has the potential to become a significant barrier to trade. A similar playing field will also be important as we price for externalities such as carbon. I mean, this is a very big deal. And I can fully appreciate that there are certain emerging markets that have a certain view, certain developed markets that would have a certain view. But one of the problems is if you have different views that are divergent. Because what that could do is, again, it could impact global supply. It could impact distribution chains. And these global value chains that won't exist in such an environment mean that emissions don't always occur in the country in which the products are consumed. Emissions cross borders. We will need harmonized standards for investments in the area. So just stepping back here, the biggest thing in terms of what one needs to look at from a barrier standpoint is stability, is standardization, and just ensuring that we eliminate volatility that is going to help make the investments we need. We need major investments in order to address the challenges of decarbonization and net zero. And at the same time, we need to do it in a global sense because we just can't do it in a local sense. So in that world, this is going to be quite crucial for us to make happen.
Thank you very much, Narasimhan. Mr. Holsetter, you mentioned being ready to make a huge investment through partnerships. Can you give us examples?
Sure, and thanks for that question. If I look at our company, over the last 10 to 15 years, we have reduced our emissions by 45%. And in order to get to our ambition of achieving net zero, we need to think differently in the next step of emissions reductions. And that's why I mentioned, it's both huge investments, but it's also through partnerships, because we're in the so-called hard to abate sector, and really, hard to abate is something that I would in many ways like to stop saying, because it's not hard in the sense that it's difficult. Technologies are there to reduce emissions down to zero. It's costly, but only if we see it in isolation. We need to see at the totality of what we produce throughout the whole value chain, and that is very much doable. But it requires a different way of working. So we're in the agriculture sector, and we produce fertilizers, and a key component in the production of fertilizers is using natural gas to produce hydrogen, and then through that nitrogen. And technologies are there in order to transform to producing hydrogen through electrolyzers, so we can make green hydrogen and turn that into green fertilizer. In isolation, that is one, a big upfront investment, and two, the running cost without the carbon cost is also higher. But if you think about this differently and think full value chain, partnering all the way from the input of energy all the way to the consumers, and think about how can we decarbonize food, then the cost for the end consumer is very small. The cost to decarbonize the entire food system is probably less than 4% of the total cost for end consumers. And we think about all the hidden cost, this is a very attractive investment if we're able to think holistically and throughout the whole value chain. And that's where we also have a role to play, that we reach out throughout the whole value chain, and that we talk with companies on the input sector, like Statkraft, the biggest renewable energy company in Europe. We work together with Ørsted, we work with Engie, we work with Aker and others in order to create a whole value chain, but also discussing with some of the major food companies and the governments in order to create these full value chains. And a very nice and maybe not very well-known side benefit of this is by producing green hydrogen and green ammonia at scale. Green ammonia is also a green fuel, and a green fuel that could help shipping to decarbonize. So to make zero emission ships, you could use green hydrogen. So here it's the possibility to do two things at the same time. But then we need also to create coalitions like the First Movers Coalition that help to accelerate investments and that lower the barriers and create an opportunity where the first movers are at least not held at a disadvantage, and that we create scale early. And that's something that I see as key in driving this, that we team up from the industries, create full value chains, and then in collaboration with governments to create predictability. And just referring to what my colleague at Reckitt just said, it's about stability, it's about standards. On top of it, it's also about transparency and a level playing field. And I think that the sum of that creates what we need in order to do this at scale, and what it creates is trust. And that's really the key word here, that we create that and we think full value chains. Thank you.
Thank you very much, Mr. Holsater, for the interesting example and also for your message regarding the standard and transparency and stability. Now we are lucky to have Mr. Haley back. Mr. Haley is the CEO of Willis Towers Watson. He's also the chair of the Coalition of Climate Resilient Investment. Mr. Haley, you have the floor.
Thank you very much. And thanks again for the invitation to speak today. And it's an honor to join such a distinguished panel. Let me just start out by following up on something Mr. Holsater said during his remarks, which is about trust and about cooperation. And I think that's a theme if we're going to be successful in addressing all of these goals. And it's something that I hope to touch upon a couple times in my remarks. But I'd like to start out by talking about an initiative that I'm involved with that focuses on advancing a particular dimension of the Sustainable Development Goals. And that's the idea of resilience and resilient investment. Now, historically, resilience has been sort of the poor cousin to mitigation efforts. But now that the timeline for the effects of climate change are much shorter, resilience has become a much more prevalent consideration. And of course, it's not a competition between the two of these. We actually need to be focusing all of our efforts on both of these at the same time. But when it comes to resilient investment, we're focused not just on the quantity of the investment, but also the quality of the investment. So we need to ensure that every dollar that we invest in, say, infrastructure maximizes the protection of the economic, the social, and the ecosystem value, maximizes that protection from physical climate risks, and does it in a relevant time horizon. So this is, if we do this right, there's actually a great cooperation with the private sector, because this is also going to maximize the risk-adjusted returns that they're realizing. This notion is relevant everywhere. It's relevant in all regions, it's relevant in all countries, industry sectors. But the most urgent action and the most support is needed in the poorest countries, those regions that happen to be most vulnerable to physical climate risks and also struggle to attract investment. And in those regions, one of the things, as we wanted to get better at understanding physical climate risk and making sure we priced it in, we realized that there's something we call the risk of pricing risk. That is to say, if all we do is put a better price on risk and understand that, we may actually make investment in some of these countries less attractive. And so what we want to do is focus not just on the assessment of risk, but also bringing the same or stronger emphasis on the management and the reduction of that exposure so that we're not crowding out investment there. And so following that principle, the Coalition for Climate Resilient Investment, CCRI, the organization that I'm involved with, is developing practical solutions that can bring together governments, international organizations, and investors to better integrate physical climate risks in their decision making. So there's two technical tools that we've been working on and are ready to be rolling out. So first, we're finalizing a national investment prioritization tool. We've been working with the government of Jamaica to test this and to develop it. And this allows for the identification of projects with the most potential to protect the socioeconomic and the ecosystem value in Jamaica. And then at the asset level, CCRI has worked on developing the Physical Climate Risk Assessment Methodology, or PCRAM. Now, PCRAM looks at the OPEX, the CAPEX, and the depreciation of an asset from a financial materiality standpoint, and it recommends incremental resilient investments. As we roll these out at COP26 or slightly thereafter, we're bringing some of the technical phase delivery of CCRI to a close. And we're really pleased to see a start to a discussion about the financing vehicles that are going to bring real capital on the ground to these countries. We've actually gotten to this point relatively quickly, and our success in getting there is due in large part to our growing membership and to the contributions we've had from our member organizations. So we launched this just 2 years ago at the UN, and we had 35 initial members, and they represented US $4 trillion under investment. Now CCRI has 120 members and about US $20 trillion under investment. So this collaboration towards a common goal has really been quite impressive. We're honored to earn the status of a COP26 flagship initiative. Our partnership with the UK government and the COP26 presidency, they've been just a terrific catalyst for the success of CCRI. And just 2 weeks ago, we received a letter from the UN Secretary General welcoming the progress that we made, but perhaps more important, encouraging us to raise our ambitions even further. So we were honored for this endorsement, but we're also delighted to challenge ourselves further. And given the audience we have here today, I'd just like to take this opportunity to say, if we're going to be successful in our mission, we're going to need the help and support of a lot of you to continue making progress. So I'd like to encourage you to learn more about CCRI and please join us. So let me now turn to the question of which policy instruments can help accelerate resilient investments. And actually, I want to talk not so much about a specific instrument, because what we really need is a good combination of them. But most critically, what you need is at the core an analytical solution that provides a robust justification for the development of these and the deployment of these on a proof of concept basis. So the poorest countries, as I mentioned, they're going to be facing fiscal constraints. They're going to have difficult investment environments. We see a challenge in the suboptimal levels of investment for single assets, and that translates into the failure of those when faced with increased severity and, increased frequency and severity of impact. So to promote better investment or more investment in resilience in poor countries, what we need is a better articulation of blended finance facilities. That is to say, we need to integrate development finance and commercial finance. But there's also important components of technical assistance, of risk sharing, and of risk transfer. So if we get the right combination of these, they're going to bring the initial investment that should incentivize and reward the right design and the right structuring of these projects. And that'll produce the benefits of resilient investments for a country's growth. As we think about these, building these financing instruments, some of them are ones that we're going to want to sustain over time until maybe countries have reached a certain level of economic growth. Others can be removed once the proof of concept is obtained. And again, we need a flexible and we need a cooperative approach to all these. So thanks again for having me today.
Thank you very much, Mr. Hady. Congratulations on your leadership in the investment in the climate resilience. And I wish to say that on behalf of the UN Sustainable Stock Exchange Initiative, which represents the membership of over 100 exchanges worldwide, representing the $90 trillion of market cap, we would like to collaborate with your coalition. If I may, Mr. Hady, can I ask you a second question? You mentioned a national investment prioritization tool that the CCRI is working on with the government of Jamaica. Could you please elaborate on the solution that you are developing?
Thank you very much. I'd be happy to do that, and I also we welcome the collaboration you just referenced. So the work in Jamaica has been the results of really a fantastic partnership, and it's this theme of cooperation again. We've been working with the government of Jamaica, just been fantastic with critical support and participation from the UK government, from the Green Climate Fund, and from the University of Oxford. By which we've started spending the necessary time. So started off understanding and articulating the needs from the government, and they helped us to understand their motivation for action. And that's really a critical question as it shapes the rest of the project. One of the things we realized very quickly was how advanced the needs from the government of Jamaica were, and they recognized the need to identify and prioritize these projects, which, as I said, are going to yield the most benefit in terms of protecting economic and social value from climate risks. And what we're really ending up with here is a national economic prioritization tool that we can use. The University of Oxford applied a leading methodology for the assessment of network exposure to physical climate risks. And so this allowed the team working on this an understanding of some of the critical dependencies, some of the network effects with regard to physical climate risks. The result, and I think we'll be able to roll this out at COP26, is a tool that allows for a visual and dynamic representation of the exposure of economic and social continuity in Jamaica. And we're already discussing similar projects in 3 other countries, and we're very excited about what's to come.
Thank you very much, Mr. Hady. Well, distinguished panelists, thank you for a fantastic discussion. I will not attempt to summarize the rich discussion we had and the very interesting and forward-looking contributions from heads of governments and global business leaders. We still have another 2 summits. One is in this afternoon, the other is tomorrow. We thank all of you for giving us ample food for thought as we get going with more than 90 sessions during the 7th edition of the World Investment Forum. I wish to thank you all for participating in this summit opening. Thank you.